Well, let's see. 5 weeks ago, when we started the Christmas Kids program, oil was around $100 a barrel. Yikes. What is going on? Good morning, Michael King. How are you?
Very good.
Hey, what is happening out there?
Well,
somebody has a position that's wrong.
Yes. Some countries have a lot of problems.
Yeah.
Countries like Venezuela and Russia
Yeah.
are selling at any price. They have real problems. Russia has trouble financing their Ukraine problem. They're deeply in debt. Venezuela is deeply in debt. Some countries are just selling oil at any price, and then, of course, there are Mideast interests in getting the price very low to make it more difficult for deep drillers in the West.
You know, it's interesting, Mike and Charles. You guys, for what, 6-7 years, have been talking about the beauty of fracking and the fact that, the United States could conceivably change the entire world stage when it comes to crude. And all of a sudden, there's a very short paragraph in the beautiful, what was it, Paul Osick's article this morning on Market Watch, talking about North American shale oil production has dramatically changed the picture of U.S. crude oil production, which is at a 40-year high and shows little signs of slowing down. And it will keep production rolling as Russia...
Production has slowed down dramatically.
They're not drilling new wells, but they're still producing out of what they've already done.
Exactly.
But they're cutting way back. I'm in the business. I'm just telling you.
Okay.
The production is cut back here in America, and the cheaper supplies will be used up. That's all. And
okay.
They'll be used up. The cheaper oil that's inexpensive to bring out will be used up right now.
And then the prices will go back up.
Right, of course.
Naturally. Sure.
No, they will go back up eventually.
Yeah, well, it's interesting you say that, Mike, because there was an article on CNBC this morning talking about you think you have low gas prices at the pump. Why are the airlines not doing this? And apparently their article this morning stated that airliners are now flying at 87% capacity nearly all the time, when that number just 10 years ago was lower than 75%. So that's really intriguing, and it says no matter what the price is, people will buy airline tickets. That's interesting.
Seemingly so.
Yeah,
I mean, it's the same thing. It's the same thing if you look at oil versus gasoline. Oil's down 50%.
Mm-hmm.
The price of gasoline is down, what, 15%?
Right.
Yeah.
Right.
We're going to probably
20%.
We're going to drop down.
I mean, it just doesn't happen that way. And the other thing about the airlines is, while fuel is a huge expense,
35%. Yep.
Yeah. But then the profit side of what they're doing is totally untethered from the price of oil and has no cost, and that is the fees for changing, the fees for luggage. I mean,
okay, I get you.
You're going to put 800 suitcases in a 767, whether they're paid for or not.
Right.
So as long as they're being paid for, you have no cost of goods sold there. It's like with Costco. For membership, there is no cost of goods sold. you're just allowing people to walk in the door and spend money. So the airlines, regardless of the price of oil or even, what their fuel and other expenses are, still have on the profit side this huge amount of income that has nothing to do with fuel, has only to do with passengers. And as you say, as passenger miles, seat miles, comes down a little, it's nowhere near where it was, and they're capitalizing on every one of those seat miles in a half a dozen different ways.
Sure.
Buying food and buying services and luggage, et cetera.
Sure.
So, that's pretty interesting, and I think that that's one of the reasons why they're holding it up. The thing that I personally see from this is the railroads will have a problem. The railroads have gone from 15 to 25,000 cars carrying oil to 600,000 cars carrying oil.
Whoa.
Yeah. It's 40 times what it was. I just read the article yesterday about it again. And the article about it was why are the U.S. taxpayers, the statistics were in the article. The article was, why are the U.S. taxpayers paying for infrastructure and safety improvements for the railroads when they won't pay for it themselves? And we're getting stuck with it. Part of the gas tax. Part of the, it's part of the same stuff that you see with politicians spending gas tax money on other things.
Yeah, and they're talking...
As opposed to just, road improvements,
right,
bridge replacements, etc. So, that's, if we stop shipping oil to any degree, that number could get cut in half, and it would still be 20 times what it was 5 years ago.
Yeah.
But it would definitely hurt the profits for the railroads.
All right, Charles. Well, on the one of the big stocks that's coming up today is Navistar. Everybody.
Now there's an old one. Do you know what Navistar used to be?
Oh, I did, but I can't remember it now.
Ingersoll Rand.
Oh yeah, sure.
A Dow stock.
Yeah, exactly. Yeah, but it's like what's very intriguing, I think, is the fact that you look at a lot of these trucking companies that are going to natural gas, or something like that. I mean, they're
right.
A lot of them are diesel. Whatever this clean diesel is, they're going there too. But, eventually, I think what you're going to see, I saw a report the other day on Bloomberg that, what was it, Baltimore said like almost 90% of its vehicles, all of its vehicles are natural gas now. Yeah. And then they have some electric trains too,
And they're not alone, Greg. In California, the buses and all of the utility stuff that didn't run on electric,
yes,
with the overhead wires
yep.
and stuff, have been running on natural gas for 10 years.
Sure. Oh, yeah.
It's clean, it's safe, and most of all, it's cheap.
Mm-hmm. Yeah.
I mean, Rick Santelli, the guy from the Chicago Merc who talks about oil all the time.
CNBC guy, right?
Right.
Yeah.
Did a show about a year and a half ago. It was a 1.5 hour segment chopped up to be shown all day. But it took an hour and a half to do the segment.
Uh-huh.
And the segment was him and a mechanic buddy of his buying the kit and installing it themselves to change a small truck like a Ford, like an F-150 or something, to convert it to natural gas, which they did in an hour and a half. So, besides the gas being cheaper and cleaner, also not that difficult to do.
That's amazing. That is truly amazing.
Okay, now I'm going to have to, I already told Mike, I'm going to have to leave at 10:30, but I want to discuss a couple of quick things.
Okay.
Number one, we just sold out the balance of our position in the bond ETF. To give you an idea of how well in this very sloppy market we did towards the idea that balance is always effective. We bought this position as a hedge against the market because when the market goes down, a lot of times there's a flight to safety.
Mm-hmm.
And where do they go? They go to the U.S. Treasuries.
Sure.
So we had a bunch of positions on, some that we made money on, some that we lost money on. But all in all, for the last couple of weeks, we've been doing pretty nicely.
Cool.
Okay. So we have this position in the small account I'll discuss because that's where it looks, that's where most people would relate to it. A week ago Friday, we bought six of the TLT December 121 calls. 2 days later, we had to sell half of them because of the 100% up rule. And on that half of them, we made $336.
Okay.
Not overwhelming.
Hey.
But it took our money out of the trade.
That'll buy some Christmas presents or Hanukkah gifts.
Okay.
There you go.
Then on Friday of last week, I sold an additional one at $4.74. That's where we made the 336. On the first half, we made 807. We made 417 against an $800 total investment. So we still had three, and we'd taken our money off the table.
There you go.
Then on Friday, as I said, we sold one more and made 336. And this morning, we sold the last two at $6.29, and that was a gain of $980. So
wow.
On a transaction that we put on as a hedge against the market for $834, we got our $834 back, plus we made $1,833.
Whoa.
So as of 2 days into the trade, we had no money in the trade.
That's amazing. Yeah.
And so that was a pretty good trade. And, I bought a bunch of the little oil stocks, which we got stopped out on the 50% rule. We got stopped out of one of them yesterday at 15 cents for a $90 loss. So we can't really complain about that. But we are currently long Facebook. We own the options at $1.95. The stock is down with the market today, and those are still $2.32. They've been as high as almost $4 already. But they've never been a double, so we never had to sell half. So we still have the whole position.
Yeah.
We're trying to buy some more Alcoa calls at 68 cents, I believe. They are currently 70 cents. So I'm guessing we'll get those. If you recall, we were in Alcoa in the $10 and change area. We sold it at 17. We bought it back at 14 and change. It's currently 14.81. And so we still have a position there. But as the outlier, as we've discussed here repeatedly about pharma stocks and biotech stocks, we have a small position in a company called Salix Pharmaceuticals. The stock collapsed a couple of months ago, about a month and a half ago.
What's the company again?
SLXP as in Peter, Salix Pharmaceuticals. The stock had a high in September of about 170, and they had earnings or some sort of news in the beginning of November, and the stock gapped down from 138 to 86.
Oops.
Yeah, we bought it at par and 80 cents, so 100.80.
Okay.
And it's been hanging around pretty nicely. I've never had the urge to sell it because we bought it right.
Yeah.
And it was only 50 shares because a normal position in the account is $5,000, so it was a normal size position.
Interesting.
It's been trading 104, 105, 107, back down to 100. This morning, however, with no current news on it, it had closed at 102 and change. The low for the day is 106.01, and the high is 113.10.
Whoa!
The last is 111.28. But it just shows you that regardless, if you manage the money side of trading, which is what we do, sometimes, when I'm a little concerned about the market, as I have been for the last couple of weeks, we put on smaller positions. So we're managing risk that way. And then we're managing risk by being balanced. You see how it pays off.
Yeah.
And as we've discussed before, every single morning there is one biotech or pharma stock that is cut in half on bad news, and there's another one that goes up, 10 or 20% on good news.
Well, there are a bunch of biotechs here, and, from Scripps to Torrey Pines and to Man Research and those, and they depend so much on federal funds,
Right.
for their research. And if the feds decide to start chopping this stuff, and in some cases it's as much as 50%, well, then obviously the companies sweat a little bit. Yeah.
Right.
Yeah, understood.
Anyway, so that's where we are in both accounts.
Interesting,
The big
okay.
account is up a shade over, not counting this week, and the fact that it had twice as many of those TLT calls as the small account. We're up about 51, 52% for the year. This is week 50 of the year. And the small account, which was up about 185% as of last week, which, just took another $1,000, which in terms of that $10,000 account is another 10%. So, we're doing pretty well with this.
Mm-hmm.
I would urge people, we are changing the way that we handle the texting service, and it will no longer be free.
Okay.
We put that information out. It'll go out in the letter again. If you just want to see what we're doing, buy the letter. But
Yeah.
If you want to participate, you buy the letter and you get the texting service with it. I often wonder why, in the beginning when we started the texting service, we would get like a churn. All of a sudden there'd be 28 people looking at it, and then, 10 of them would drop out. And those were people who, just said, oh, I'm going to look and see what this is and see how it works. And then they start getting these texts during the day, sometimes a lot of them, sometimes not at all. And they say, this is a pain in the neck. I'm just going to stop. And they send the word stop in as a text, and they get deleted. If I was paying for the texting service, I'd be sitting on the edge of my seat waiting for the next text to send me to do something.
Sure.
At up 50% on a $100,000 account.
Exactly.
And up 200% on the small one. So
Sure.
It really pays if you're a trader. An extra set of eyes is always helpful.
Mm-hmm.
An extra opinion is always helpful. And frankly, not that much money. You make a year's worth on the subscription in a single trade.
Sure.
So that's where we are in both of those accounts. And let's remember, I had my first down quarter in 4 years this year, and we were down as much as 29%. So up 185 looks darn good.
Wow. Yeah, it does. Holy smokes.
Yes, I might add that Charles has had 4 years of successful trading.
Yeah.
Yep. I have all of the performance records for 4 years, and so Charles is
which of course begs the question: if we're so smart, why aren't we rich? Rich or poor, it's good to have money.
Yeah, I know. Oh, well.
Anyway, the one more point that I want to make, which has nothing to do with the way that the accounts are trading, we're not particularly political in the market letter. I write something every once in a while, and of course Mike says, let's drop the politics, and I understand that. But what's going on right now is the best example of where a problem comes and you don't expect it. The quickest thing to change psychology is political or geopolitical. And if you think that this Russian stuff, which started with, as I referred to him, Tsar Putin, starting a year ago, saying he's not given up, I wouldn't listen to a word he says, he's going to do what he's going to do. And of course they have a different kind of time perspective. They deal in 5 and 10 year blocks, where we deal not only quarter to quarter but minute to minute in trading. Mm-hmm. What's gone on with the sanctions is really hurting them. The ruble today, they raised rates overnight from 10 to 17%.
Right.
And
it's crashing.
The ruble is down, dramatically. And remember, we traded the RSX, which is the Russian market ETF, and we traded it in the area of about 23, 24. It's $12.
Oh, wow.
And so, you have to be aware of the geopolitical stuff.
Sure.
And the political
further
stuff.
complicating things is that
Right.
Europe refused to go along with the QE program.
Right. They've been talking about it, but they haven't really done anything about it.
Well, the Germany has been against it, and their Bundesbank president, Weidemann, just opposed completely to do it, and they got the money.
But doesn't
Germany has the biggest surplus.
Yeah,
of all
not only
of
do
the
they have the biggest surplus, but let's remember that they have the most extensive historical experience of what deflating fiat currencies means. They were the ones
They
in
had
the
massive
world
inflation.
that were the worst hurt.
Mm-hmm.
I mean, you still hear stories about, people taking a bucket full of Deutschmarks to, buy a loaf of bread.
Yeah.
I mean, they learned the lesson. They learned it well. And so, they're the grown-up.
They're the only
That part of the
grown-up, though.
world.
They're,
Right.
Yeah, they really are. They're the only grown-up in the EU.
Yeah.
Yeah.
And, and they're not going to be swayed by it.
Yeah,
They have no interest in paying for Italy's problems.
exactly. Or Greece.
Spain's overdevelopment in real estate, or, the Greek economy, which has hurt us dramatically in the big account because of National Bank of Greece. I mean, we made a whole bunch of money on it, and now they reversed the National Bank of Greece stock, so it's selling for $2, and I have some $12 stock.
Ooh, oh, ouch, that hurts.
Yes.
But but
welcome
you have
Chris
to be aware.
Anderson. From
All right, I'm going to
XIMEN
run, guys.
Mining.
All right, Charles. Hey, thank you very much, Charles. And is this
Welcome,
Chris?
Anderson. Yes.
Hey, Chris.
Good morning, gentlemen.
Hey, welcome in BC. What's the weather up
Yes.
there like?
Well, it's warm, actually.
Well,
No snow and no rain.
no snow, no rain. Hey, if it's warm and there's no rain in BC, that's a miracle.